He's the CEO at Foxhall Capital Management. And I was talking, Paul, with Doreen for a second about Caterpillar. It is a bellwether, as she said. It's one of these companies like FedEx where you look at it to gauge the state of the U.S. economy. That's why people are a little bit disappointed today. But you say it may not be as bad as it looks at first glance.
I think the market's really overreacted with this stock. When people see it miss its earnings, they're thinking that demand for Caterpillar products are going down. Nothing could be further from the truth. They had a record 37% increase in sales last quarter. They actually believe that that will be going forward. What happened this quarter was inflation. They had higher raw material costs, steel, energy, transportation costs, and for the first time in a long time, we're hearing that they're having labor inflation, wage inflation, which actually may be a good thing for the broader economy. It means when there's pressure on prices, that means that people are probably going to start hiring again. But the demand is still there. 37% growth. And I think once investors start reading that report over the next couple of days, they're going to realize they made a mistake and these shares are going to go back up again.
All right. Hey, I want to bring in Julie talking about Caterpillar and that growth, 37% growth in sales. Julie, let's talk about where they're getting those sales from.
Well, I want to talk specifically about China. Japan was actually a disappointment for the company this quarter. Still some supply chain issues there. But there's a lot of talk about what China is going to mean, not just to Caterpillar, of course, but to lots of American companies. You can see Caterpillar actually gives GDP forecasts for various countries. So for 2011, Cat does think that growth is going to slow somewhat to 9% from about 10.3% in 2010. And Doug Oberhelm, the CEO, did speak on the conference call today about China, and he says, yes, things are going to slow down there, but that's a healthy thing. He says we did see probably an overheating, a crash would be bad, a slowdown, not so bad. But there did seem to be a little bit of concern around those comments. So I would ask you, Paul, because I know not only do you look at Caterpillar, but you also look at some of the emerging markets. What's your view on China, given that they're talking about a potential slowdown? Isn't that going to hurt, at least at the margins, growth elsewhere?
Well, I think you have to put the slowdown, what people are talking about, the slowdown in China, in some sort of historical perspective. What we were seeing a few quarters ago was a bubble-like growth in China the growth was up around 12%. That is completely unsustainable. And what the Chinese government has done, it's aggressively moved in to raise rates and to slow down the growth. But they're slowing it down to 9.3, 9.5%.
We'd like a slowdown like that.
Yeah, we'd love a slowdown like that. And that's been the historic growth rate for the last 5 or 6 years in China, of which most people thought that was magnificent. So when you hear China slowing down, it's actually slowing down from this kind of bubble growth of a few quarters ago, but overall they're slowing it down to the same spectacular rate that we've seen over the last 5 years. So I think investors have got to understand the historical perspective on when people are talking like that.
Hey, I want to bring in Sheila as we're talking about China. They've had great growth, the economy there has, but so has Brazil. Interestingly enough, though, the Bovespa not performing well year to date.
Yeah, no, exactly. So let's take a look at emerging markets as a whole this week, because all of them have gotten a boost. In fact, if you take a look at the Bovespa, they're up about 1% on the week. And this is, of course, coming out of that good news from Greece and the fact there may be some resolution there. But if you take a step back, take a look at that bigger picture of what's happening in Brazil, the picture not so hot. So in fact, over the past year, the Bovespa is down about 8%. If you take a look at this number since November, which was the last high, it's actually down about 17%. And the number one concern on investors' minds, inflation. That has certainly been a huge issue in a lot of these emerging markets, whether you're talking about India or China or Brazil. Paul, my question to you is, when you take a look at the Bovespa right now, it's priced at around 9.5 times, which is a pretty cheap level. We haven't, in fact, seen those levels since about March. Is it priced because inflation is so high and the growth's going to slow down, or is it still a good value right now? Should investors get in?
I think now is a real buying opportunity for Brazil. It's one of my favorite countries. And you have to actually look at what the Brazilian government is doing. They have had inflation down there, and the Brazilian central bank has been raising rates. And whenever a central bank raises rates, you're going to see stock market that's probably declining until those rates level off. The central bank has signaled that it's almost ready to end its rate raising. I don't know when that's going to happen. I assume within the next 6 months. But when that happens, you're going to see that market take off. And there are some spectacular stocks. Telesp, one of the stocks that's the telecommunications to Brazil, to Sao Paulo. This is the dominant cell phone company. It has a huge dividend, over 9% dividend, and huge cash flow. Dominant in the market, and they're just getting into having smartphones, which means data sales are going to be increasing earnings in the future. It's one of the great
American Mobile you like as well down there.
I love American Mobile. This is a company that has more subscribers than Verizon and AT&T combined, and again, they're just getting into smartphones, so we're going to see an increase in earnings because of data sales. And these companies like Telesp in Sao Paulo, they're selling for 9.5 PEs.
It's interesting you talk about Caterpillar's growth due to what's going on overseas. You like these companies in Brazil, you like emerging markets, and the companies that you like in the U.S. are those that have global exposure. It's not an uncommon theme, but it makes me wonder what you think about the U.S. economy. If you're so reliant on everything that's going on outside of the U.S., are you worried about the U.S. economy?
I am worried about the U.S. economy. It is growing. It's just growing at a mediocre, slow rate. But I think what investors have to focus on is that the U.S. stock market is going through a historic long-term trend where it is decoupling from the underlying U.S. economy. With 50% of earnings in S&P and Dow stocks coming from outside of the United States, mainly Asia and emerging markets, the S&P and the Dow represent what's going on in Asia and emerging markets just as much as they do in the U.S.
And just to bring a couple of these stocks, you like Coca-Cola, for example. You like Johnson & Johnson. And these are companies that get a lot of revenue from abroad, obviously.
Coca-Cola, 80% of its revenue comes from outside the United States. We saw McDonald's earnings beat expectations this morning. Almost all of it coming from Asia and emerging markets growth. And so I love U.S. global brands that are focusing on the 3.5 billion newly affluent consumers in Asia and emerging markets.
I want to talk. Adam has a little bit here on commodities. Adam Johnson focuses on commodities really for us. You like Exxon, Rio Tinto, and Spanish Mountain Gold. Adam, what have you been looking at as far as commodities prices here? Because we're talking about commodities inflation.
Yeah, Paul, I got to ask you about potash. You take a look at potash, the stock's back to $60. That's where, in theory, there was going to be a deal with BHP. That deal never happened. It's now trading at about 18 times. So the question is there just too much hype that has been baked into these fertilizer names like potash, like Mosaic, et cetera?
Again, I think it kind of went down because that deal didn't really materialize. But in the long run, fertilizer is going to be in an upward trend. One of the commodities we really like are energy, oil, gold, and agricultural commodities. And if you just look at the supply and demand, the demand is increasing. We're especially seeing this in Latin American agriculture, which is largely being sent to Asia. And so the demand for fertilizer, the demand for seeds from companies like Monsanto, things like that, I believe these are in long-term trends up.
Hey, Paul, thanks so much for joining us. Paul Dietrich here, the CEO of Foxhall Capital Management. Just want to point out, I said them already, but Exxon, you like Rio Tinto, Spanish Mountain Gold.